Hi friends, this is Nilesh Shah from Envision Capital. I think we are living in a very, very different environment. Clearly, COVID-19 has essentially reset our lives, and it is probably one of the most tragic events that I have ever seen in my life ever. And I think in the recent years, it is also essentially the most tragic, most uncomforting scenario that we are placed in. I hope you and your family are fine in this environment. I hope that all of y'all are safe and healthy, and best wishes to each one of you, your near and dear ones, on remaining safe and coming out of this crisis in a much more stronger manner. Now, what this essentially does, COVID-19, as I said, is a huge reset. Clearly, we have never seen virtually the economy shut. We've never seen farms, factories, shops, malls, multiplexes, all of them literally closed down. And of course, the impact on the economy is going to be huge. So, of course, the lockdown was a very courageous decision on the government. Given that at that point of time when the government took this decision, there were only 536 registered cases of people affected. Despite that, the government took a very courageous decision to go ahead with the lockdown. And I think clearly the priority was of lives versus livelihood. Now, what we see things going ahead is that there is going to be definitely both demand destruction for some businesses, and there is going to be a subdued demand for some businesses. There will some businesses which will face temporary challenges because of supply side disruptions, but they should basically be back in a normalized manner. Now, in the very short term, of course, GDP growth is going to be impacted, but we have to keep in mind that, and of course, this will have implications in terms of the government essentially coming out with a stimulus. It will have some impact for the fiscal deficit. But I think overall, what this would essentially mean are few things. One is you are essentially going to see the benefits of the economic stimulus come in. Thankfully, India now has a Aadhaar kind of a structure, the Jan Dhan accounts where cash transfers can go into the accounts of the needy. And so to that extent, we don't think that this is going to be a permanent hit on consumption. If at all, many more millions of people will actually come into the main consumption market, number one. Number two, globally, obviously, there is now even a stronger case for India, given the kind of geopolitical environment and the equations changing. Corporations worldwide are thinking of the need of de-risking and relocating part or all of their manufacturing facilities to India. The recent tax cuts will essentially be a big booster for this. And we all know that India reforms in a crisis. So clearly, I think if this crisis is used as an opportunity to undertake structural reforms on land, labor, with interest rates lower, GST network in place, corporate taxes lower, it couldn't be a better time for manufacturing companies to come to India and set up their business. So I think India, which essentially has been growing largely because of strong consumption, because of the favorable demographics, you will probably see over the next few years, a lot of the growth coming in from the investment cycle, which means new investments happening in infrastructure, new investments happening in manufacturing. Our import intensity is expected to come down. Our export intensity is expected to kind of go up, which means overall from a trade deficit, balance of payments, and a currency, I think all will essentially finally emerge in a much, much stronger shape. Also, the crude crashing, I think is phenomenal. As I speak, we've seen some record fall in crude oil prices. Brent now trades at about $25 to a barrel. And that, of course, gives additional room to the government to expand its fiscal deficit and take care of stimulus and basically provide the necessary stimulus for growth. So I think overall, what this essentially crisis does is that in the very short term, it is going to impact our economy, it is going to impact growth. But I think 2 quarters from now, or maybe at max a year from now, you're going to see growth come back. And it is going to be even a better time for businesses to grow with lower inflation, lower interest rates, lower tax rates, a well-implemented efficient GST system, and a significant increase in infrastructure investment. So overall, both the cost of doing business and the efficiency of doing business, I think, are going to be higher, which essentially means good times for companies in India. What we are trying to do in this environment is our portfolio strategy. We've been running the Envision India Value portfolio, and I think we run a very concentrated and a focused portfolio of about 20 stocks in our portfolio. Largely our focus has been on consumer staples, consumer appliances, financials, especially some of the non-financials like the general insurance companies, health insurance companies, asset management companies, life insurance companies. That has been a big focus. Recently, we've also added a very leading private bank with the valuations coming off. So clearly, we believe that the portfolio is extremely well positioned towards the long-term structural opportunities that India has, which essentially is that India remains a highly underpenetrated market, and is expected that the consumer and the financial segment, both combined, are expected to kind of witness high growth because of the demographic advantages that India enjoys, the fact that there's so much of urbanization happening. Urban markets will essentially be strong, rural markets are significantly underpenetrated, and therefore they give enough headroom for businesses in both the consumer and the financial space to grow. We are getting constructive on essentially some of the pharmaceutical space, utility space. These are some of the areas where we think that demand will essentially hold up. Demand will be very robust. And so to that extent, I think that on an overall portfolio basis, we believe that essentially the portfolio will remain well diversified and will essentially be able to participate and try and make the most of the India growth opportunity going forward. Our portfolio is largely around essentially what are called basically the mid-cap companies, but these are not necessarily mid-cap from the way we normally understand. A lot of these companies essentially are leaders in their respective business. So we own the largest asset management company, we own the largest general insurance company, we own the largest private bank, we own the largest consumer kitchen appliances company. So these are essentially companies which are classified as mid-cap, but essentially they are leaders in very emerging sectors. So clearly, if we look at basically our set of companies, these are companies which are poised for growth. These are leaders in their respective industry, their respective segment, in their respective niches. These are very asset-light companies. These are companies which believe in capital efficiency as well as governance. And of course, to top it all, these are companies which essentially also demonstrate capital efficiency on a very, very consistent basis. So we think that this is a great time to kind of build a portfolio. In fact, for some of our newer portfolios, we still have been holding a lot of cash, and in a way that we are very positive and constructive from an investment point of view, that valuations have become reasonable. And it is giving us the opportunity to continue to kind of construct and build a portfolio for the next 3 to 5 years. Crises do come, but crises are the best time to buy, especially some of the beaten down space where we can really buy some of these growth capital efficient leaders at a very, very reasonable price. So I think the broad message is that yes, there is a crisis, but we should look at this crisis as an opportunity to kind of invest for the long term. And we clearly believe that at Envision, Envision's India Value portfolio is essentially a great collection of some outstanding businesses that we have essentially identified, cherry-picked, where we have a high degree of conviction, and which we would want to basically own them for the next several years, because we expect that post the crisis settling down, our collection of companies will not only survive and revive, but essentially they will thrive once India gets back onto its growth path. And we think that the best times of India lie ahead.